Hello everyone, I am Pratap here. We are at part 2 of lesson 11. It is a practical lesson for drawing demand and supply zones for different time frames. I will also show you my TradingView color settings for drawing demand and supply zones for different time frames. And we will also observe the time frames where the risk is higher and reward is higher, and similarly risk is lower and reward is also lower. And this lesson is having dependency on the earlier lessons. In case if you are accessing this video first time, please go to NeoStock homepage. We are providing the complete free training on supply demand zone price action. So you can click on this homepage and scroll down to the playlist supply demand zone price action course. So click on this playlist. You can identify all the lessons in this playlist. So please go through one by one, starting from lesson 1.1 and until the most recent lesson. And all the upcoming lessons also will be placed under this playlist. I am also providing the link to this playlist in this YouTube video page description. So please access this playlist link from this YouTube video page description. So let us get into the practical session. And let us look into the chart Delta Corporation. Currently it is showing a chart on a daily time frame. That means all these candles are daily candles. So how do you move to another time frame? Previously I explained. You can click on this time frame and you can able to see this menu items. Here we have a different menu items. And if you want shortcut, that means some of your favorite time frames into this toolbar. See, I have already having all these time frames in the toolbar. So what you can do in this menu list, you are seeing this star mark, right? Click on this star mark. Whichever the time frames you want on this toolbar, just click on the star mark. Whatever the yellow color currently showing, I have already selected them. So all your favorite time frames will be placed under this toolbar, so that every time you need not click on this menu bar. So let me move to weekly time frame. So here W indicates 1 week. Just click on that. Now all these daily candles are changed to weekly candles. Now all these candles are weekly candles. And if you want monthly candles, click on monthly time frame M. M indicates 1 month. See, now all these candles are changed to monthly candles. If you want 15 minutes, click on 15M. Now all these candles are 15 minutes candles. Click on this 75 minutes. Now all these are all 75 minutes candles. In case if you are using a free version of the TradingView, probably 75 minutes you may not be having access because it is not there in the default list. So what you have to do alternatively, you have to click on 1 hour. Just click on this 1 hour. Now all these candles are 1 hour candles. You may not see much difference between 1 hour candles and 75 minutes candles. Some difference is there, minor difference. See, this is 75 minutes chart and this is 1 hour chart. Okay, this is the way you can move from one time frame to another time frame by clicking on these different time frames. So let us draw demand and supply zones starting from monthly time frame. So I'm moving to the monthly time frame. Now you identify the demand and supply zones. Now the concept is same as what you have already practiced in your first practical session onwards. Lesson 9, practical 1, you have already practiced. Even practical 2, practical 3 and practical 4. So follow the same. But only thing you have to learn how to change the colors. So actually what I did, I have given light color for monthly time frame and saved that in the template. You know how to save in the templates. But anyway, I will be showing you once again. So what I am doing, I am selecting this price range. We have already created this shortcut. In case if you have not created the shortcut, from here you can, from this menu, you can select the price range. So there you draw. Sorry, this demand zone is already violated. We are supposed to drop from here. This is we have a rally candle, we have 3 base candles, and again another rally candle as a leg out. So I want to change the color. So what I am doing in my template, already I created with the name MDZ. MDZ indicates monthly demand zone. I have given a shortcut name. So I am selecting from the template. Previously you created just demand zone and supply zone in the template. Now you learn. So why I created for different time frames, so that to identify based on the color I want to identify. If it is a very light color, I want to identify it is a monthly demand zone. And the color thickness is a little higher than the monthly, I can identify that as a weekly demand zone. Okay, what is the color settings I have given? I'm just double clicking on the settings. So in the style, line color, always we are giving a very light black color, or you can say brown color. But what we are having interest is on this background color. What are my settings? You can follow same settings what I am using, or if you don't like, you can use a different settings. And if you and me are using the similar settings, it is easy for you next time when I am explaining all the charts in the future sessions. So that's why I am showing you my settings. See here, we have a thick green color. 1, 2, 3, 4, the fourth column. So under this thick green color, see the first one below this, the first column or the first row. So this is a very light green color. I have selected that, and then see the opacity value. The opacity value I have selected as a 10%. See, if you increase the opacity value, the thickness of this zone will be changed. I mean, the color thickness of this zone will be increased. See, I'm increasing this. The moment I made it 100, see how much thickness it is having. So for monthly time frame, I want a very light color. That's why light green color. So that's why I have given the value 10. The opacity value for this is for monthly demand zones. The light green color I have selected. Within that again I have selected the opacity at least level, that is 10%. Okay. After that, what you can, instead of clicking OK, save these settings in the templates. You know how to save. Under this template, you can click on save as. There you can type whatever the name you want to give. I have given a name MDZ. MDZ indicates monthly demand zone. Maybe you can give same name or different name, whatever you like. So MDZ, then click on this save. After that, click on OK. So that this setting will be changed in your templates. So later on, it is easy for you whenever you draw the monthly zone. What you do? You just right click on this settings, go to the templates, and there you select MDZ. If it is a supply zone, what you do? You just select, instead of MDZ, MESZ. So I got another color here because this is a demand zone. So I am changing the color to MDZ, monthly demand zone. So light green color. Okay, what about monthly supply zone? So here we have a supply zone. We have a rally candle, we have a base candle, and then we have a drop candle. So RBD. So let us draw this zone. But what is the color we got? We got monthly demand zone color we got, but we want monthly supply zone. So let us change the color to red color, light red color. So in the template I already saved with a name MSZ, that is monthly supply zone. So now the color is changed to very light red color. So what are my settings? So let me double click on the settings. So what you are interested to know, the background color. So I'm clicking on this background. See the color. The first column, we have very thick red color. Below that, the first row, below this thick color, the first row, we have very light red color. So select that. And then opacity, the opacity value I have given 10%. So remember, this is the setting. After that, don't forget to save in the templates. Save as, you can give the name MSZ, monthly supply zone. After that, click OK. So this is the way you can create template for your monthly demand zone and monthly supply zone with light colors. Okay, now we have created these zones. Okay, so what is the risk? What is the reward? This is the risk for the demand zone. The green color, light green color area is the risk. The light red color area is the risk for supply zone. What is the reward? The reward is between the demand and supply zones. So let me draw a vertical line to know what could be the risk and reward for this demand zone and the target as a supply zone. So here under this plus mark, you have a look into the first menu. Just click there, click the arrow mark. You are seeing different lines, right? There one of this menu item is info line. Click on this info line. And now you draw from demand zone proximal line to supply zone proximal line. You just draw a vertical line. So what is the value it is showing? 93.80. That means the distance between this demand zone and supply zone is 93.80. Because it is an Indian stock, it is in rupees. The meaning is it is 93.80 rupees. Or if it is a US stock, it could have been $93.80. So whichever the country you belongs, whichever the chart you open, so whatever the value it shows, so that is in your currency. Because mostly I am using Indian stocks, so I am referring with the Indian currency name rupees, 93.80 rupees. And which is 69.21% from this demand zone to supply zone, the value. From 135 to 229. Here the proximal line is for demand zone is 135, around 135.55 paisa. And the proximal line for the supply zone is the value is around 229.35, 229 rupees 35 paisa. And its total value, that is 135 minus 229.35 minus 135, that is 93.80. And from this demand zone, the percentage value is 69 point. Suppose if the price reaches the supply zone, you will get a profit of 69.21%. That is the reward you are going to get. This is on monthly time frame. Okay, then what about the risk? Again, you draw the line from here to here. So this is your risk. Just place your mouse there. So 37.20. 37 rupees is our risk. That is equivalent to 37% risk. 37.65% risk. If you get a loss, if your analysis is wrong and if prices go down and violates this demand zone, you will be losing 37.65% from your capital. The risk is high. That's why the reward is also high here. Always remember, your reward is always depending on the risk. Because you are taking higher risk, you are also expecting higher reward. So the point you should understand, monthly time frame is having higher risk and also it will give you higher reward. That is the point you have to understand. And if you want to know the settings of this, what is the name? Info line. If you want to know the settings of this info line, let me show you my settings. Just double click. I have selected these two parameters, price range and price change percentage. I mean percentage change. These two remaining all the values I have unselected. Because my interest is only what is the range from here to here. There are other tools also available which combines both risk and reward that I will show you at the end of this phase 2 training. I don't want, because at this point of time, at least the minimum manual level calculations you have to do to understand the better. So what is RR? Previously we have subtracted the values from this proximal line and distal line, and then we identified the risk, and similarly from this proximal line to this supply zone proximal line we have subtracted and we identified. You have already practiced in the first phase. Now with the help of these info lines, let us calculate now. Now your calculation part is a little reduced. So what is your reward? It is 93.80. Let us say 94. Let me say 94. Approximate value we will calculate. And what about this value? 37.20. Let us say 37. So divided by 37. So it is 1:2.5 risk reward. Even this calculation also you can avoid by using some other option, but I don't want you people use any other tools. Till end of this phase, at least this much minimal calculation you do on your own. If you do these calculations on your own, you get some advantage. Your mind thinking level will be much better to understand some of the concepts you are going to learn in the future lessons. So that's why please follow my advice as it is. Don't use any shortcut methods. So 1:2.5 is a risk and reward. So is 1:2.5 is a good risk reward? Okay, 1:3 is actually minimum acceptable level. Okay, if you are an experienced person, even 1:2.5 is also acceptable. And 1:5 is the best for the beginners. 1:5 risk reward. But anyway, this we are calculating at the monthly time frame level. Now let us look into weekly time frame. Let us see how much risk and reward will be there. So now I am changing the time frame from monthly to weekly. I am clicking on the shortcut W in this toolbar. Okay, now let us draw demand zones. What is the nearest demand zone for these prices? Here we have a nearest demand zone. Inside this monthly zone, we have one demand zone which is nearest to the current prices. So let me draw a zone. Okay, this is, but the color is supply zone, monthly supply zone color. I want monthly demand zone color. Sorry, this is weekly time frame. Sorry, this I want a weekly demand zone color. So I will right click. I'm going to the template. I'm selecting. I have given a shortcut name WDZ. That is weekly demand zone. See now the weekly zone color is a little thicker than the monthly demand zone. The thickness is increased. The color. So what is the settings I'm using? Let me double click on this settings. This is the background color is the same. Under the dark green color, we have the row below this. We selected the light one. The same thing we selected for monthly also. But what is the difference? Monthly I have given the opacity value 10%. For weekly I am giving 30%, the opacity value. And line colors, everything is same. The light black color we have selected. So after that, don't forget to save in the template. Save as, you can give the name WDZ. That is weekly demand zone. After that, you can save and click OK. Okay, this is the weekly demand zone. Then what should be my weekly target? So the nearest supply zone. What is the nearest supply zone? Here we have a drop candle, and then we have 2, 3, 4, 5, 6, 7 candles. 7 candles is not a good zone for taking the trade, but this is for defining the target we are giving. You may ask a question, because the weekly zones will be broken easily if the candles are more. So instead of this target, why can't we go even further up? But don't take that kind of risk. We don't know. Sometimes the candles, we don't know. It may reach this weak zone again, prices may turn down. In rare situations, most of the situations, the zone will fail. But in rare situations, we don't know. Maybe institutions, again, they may create a new supply from here. Who knows? You will be seeing such kind of situations in the third phase of our training program. So just to avoid that, we are not taking a trade here. We are using this zone just to fix our target. So this is the low of this zone and this is the high of this zone. So all these candles are part of this zone. So we say this is a ERC candle. Say this drop candle is a ERC, that is leg in. We have a base. All these candles are part of the base, and then we have a drop. But what is the color? The color should be changed to weekly supply zone color. Weekly supply zone color thickness is a little higher than the monthly supply zone. So I already created a template. In my template, I have WSZ, that is weekly supply zone. See now the red color thickness is a little higher than the monthly color thickness. Okay, let me double click so that you can see my settings for weekly supply zone. So I'm clicking on this background color settings. See here, monthly also we have selected the dark green color below that row, the row whatever is there in the first column. Monthly also same thing we have selected, but what is the difference? The opacity value I have increased it to 30%. Monthly it was 10%, here it is 30%. So that you can create with a weekly supply zone with this color settings, and then go to the templates. You can click on save as and you can give the name WSZ, that is weekly supply zone. After that, save. Okay. Now let us get into the main discussion. Now what is that we are seeing? Now again we have to check the risk and reward. So we have info line. This will be the reward. And what about risk? This is the risk. So what is risk now? Risk is 9.95. It is showing minus 9.95 because I drawn from top to bottom. If you don't want to see positive, if you want to see positive value, what you can do? You from distal line to proximal line, you can draw the line like this. Okay, 10.15. 10.15. This is the risk. And what about reward? 38.40. That means around 38 rupees is your reward, but your risk is 10 rupees. But is the risk, suppose you would have taken a trade here, is the risk occurred? Yeah, slightly it went below the distal line. That means your stop loss might have been hit here. But need not worry, because later you will be learning at the end of this course, before end of this course, you will be learning a concept called stop loss buffer. Just below this distal line, you will add some more buffer. Now definitely this value will be within that buffer. And if the price go below the buffer, at the time only you will exit from this trade. But it slightly came down, so nothing to worry. Definitely you would have holded this, and after that see how prices are moving up. That way. Suppose if prices would have gone a little lower, little below, definitely you would have sold and you would have got around 10 rupees loss. Or if you add your stop loss buffer, probably it could have been maybe 10 rupees, 70 paisa or 80 paisa, something like this. But your reward is 38 rupees. So this is the way. See now what happened, risk is reduced. At the same time, reward is also reduced. Compare it to the monthly time frame. See, monthly time frame, what is the risk? 37 rupees is the risk. But here the weekly time frame, the risk is only 10 rupees. Similarly, what about the reward? Monthly time frame, the reward is 93 rupees. But in weekly time frame, the reward is 38 rupees. So the important point you have to observe, when we are going from high time frames to low time frames, let me use the word higher time frames. And lower time frames means the time duration is less. See, weekly duration is less than monthly duration. So compare it to monthly, weekly is the lower time frame. Similarly, compare it to the weekly, monthly is the higher time frame. That way you have to understand the words higher time frame and lower time frame. These are the general English words. Later on in the next chapter, in the next lesson, you will be learning some technical word, higher time frame and lower time frame. Their meanings are different. That's why you should be very careful. Whenever I say higher time frame or lower time frame, is it a general English higher time frame and lower time frame, or is it actual technical name higher time frame and lower time frame? Anyway, we will have a detailed discussion on this in our next lesson. But time being, in this lesson, whatever the word I am using, higher time frame, lower time frame, they are all general English statements. Please remember. Okay. For weekly time frame, monthly is the higher time frame. Similarly, for monthly time frame, weekly is the lower time frame. Not only weekly, anything below monthly. They are all lower time frames for monthly. Even daily is also lower time frame for monthly. Even 15 minutes is also a lower time frame for monthly. And similarly, for weekly, monthly is the higher time frame. Quarterly is the higher time frame. And even half yearly and yearly also higher time frames for weekly time frame. This is what you have to understand. What is higher time frame, lower time frame, English statements, not the technical terms. Okay, now the important observation you have seen, monthly is having higher reward and also higher risk, but weekly the risk is reduced, because of that the reward is also reduced. And we will see one more scenario for daily now. So now I am changing the time frame from weekly to daily by clicking the D. D indicates 1 day. Okay, now we have a new demand zone. We have a drop as a leg in, we have a base candle, and we have a leg out candle. So let me draw the zone. And I have already given a shortcut name DDZ. DDZ indicates daily demand zone. So I change it. See, now the color thickness is a little bit increased compared to the weekly and even monthly. So what are my settings? Let me double click. So these are the settings for daily time frame. I mean daily demand zone. So let me click on this background color settings. This is important for you. See here, what is that I have selected? See below this dark green color, the first row previously we used it for monthly and weekly. Second and the third one I have selected now. The third one I selected. And the opacity value I have given 30%. So with these values, I got this color setting. And don't forget to save as a template first time. First time after you create this daily demand zone. Okay. Now this is the new zone. How this new zone will helpful to us? Next time again prices enters into this. Probably here we can take an entry. Then is there any supply zone? Yes, supply zone. We have a supply zone here. Inside the weekly we found a supply zone. We have a drop candle, and then we have 3 base candles, and then we have a drop candle with a gap. We can say it is a professional gap because it is coming from the supply zone. So anyway, let us draw this supply zone. This is for daily supply zone. But I need to change the color. So in my template already I have DSZ, that is the daily supply zone. See now the thickness of the color is increased compared to the weekly. So what are the settings? Let me double click and going to the background color. See, look into this setting. In the first column we have a dark green color. Below that, the first column we used for monthly and weekly. Now I'm using the third one. This is the first, second and third. There I clicked, and then the opacity value I have given 30%. This is for monthly supply zone settings I am using. After that, don't forget to create the template. Okay. Now look into the risk and reward. So let me draw this info line. See now the risk is only 2 rupee 85 paise. That is 2% risk. Then what about reward? Let us draw the info line. So these are all approximate values. Sometimes the line may go a little deep inside, but just ignore. Approximately we are saying. So around 36 rupees, 37 rupees is the reward. And the risk is only 2 rupee 80 paisa. See, you have very excellent reward for this scenario. Because why we got such a big reward? Because we identified this is the nearest supply zone. Because of this gap, we got a huge reward here. We got an opportunity. So if prices return, come back to this, probably you may get this big reward. It is an opportunity. But it may not happen in every scenario like this. Probably somewhere here a supply zone will be there, and probably your reward also might be reduced. This is a lucky scenario. Almost you have equivalent weekly supply zone reward is available here. But that may not be the case every time. Most of the times what will happen? The the daily reward is mostly it is less than weekly reward. Similarly, the risk is also less. What is how much we have seen the risk for weekly? Almost 8% risk we have seen for weekly. But when it comes to daily, the risk is reduced to only 2% risk. What we have seen for monthly previously? Monthly we have seen a risk. Monthly, I think it is too small. Let us change the time frame. Let me go to monthly time frame. See, monthly risk is 37%. When it comes to weekly, that 37 is reduced to 10%. From 37% risk to 10% it is reduced. And when we go to the daily, the 10% risk is reduced to 2.85% risk. Sorry, 2.13% risk. So this is the way when you go down to different time frames, the risk will be reduced. So based on this point, we need to understand the lowest time frame is having the least risk. Let us say 5 minutes. 5 minutes is the least one in our analysis. So 5 minutes time frame, we have a least risk. 15 minutes, the risk will be increased slightly up higher compared to the 5 minutes. Similarly, 75 minutes will be having even more risk compared to the 15 minutes. That is 75 minutes or 1 hour. It's equivalent. Similarly, after the daily will be having even more risk. And this observation is very, very important because you are going to learn one more topic about the risk management in this second phase of the training program. Previously, you learned how to reduce the risk as per proximal line concept. Proximal line type 1, type 2, type 3 you have seen. That is what you learned. But now, this approach, whatever we are observing the risk from one time frame to another time frame, if we are moving, the risk is reducing. So, how to make use of this concept, you will understand after few sessions because some more concepts we need to complete. That's why to understand those concepts in a better way, I have given this exercise to you. There is a purpose why I have given this exercise. The purpose is after completing this exercise, now you will be in a position to understand when we are moving down from higher time frames to lower time frames, the risk will be reduced. That is the point you have to understand. That way, how to reduce the risk, you get better clarity once we move on to the actual concept. Hope you understand why you are doing this exercise. Is it clear? Okay. But what is the disadvantage here? Okay, risk we are reducing. What about reward? Reward is also will be reduced. When you are changing the time frame. Because we have seen monthly how much reward it has given. 69% reward it has given. When you change it to the weekly, the 69 is changed to 38% reward. When you change it to the daily, the reward is changed to 36% or 37%. Okay, this is a special scenario, but most of the times maybe it will be reduced to some 10%, something like that, or less than 10%. Very few times you get such a lucky scenarios having a huge reward. Okay, hope you understand the main essence of this exercise. The moment you are reducing the moment we are moving to the lower time frames, the risk will be reduced. At the same time, reward also will be reduced. Now you should also think inside a monthly, we will take entry at daily time frame. Prices are getting into the daily time frame. Then can we target our target to the monthly supply zone? That way we get a huge reward, but risk is very less. Just I am raising some questions in our mind. And answers to these questions we discuss in detail once we get into that actual lesson. The main goal of this exercise is to raise some questions in our mind. I want you to people think in a different way than how the normal people generally when they learn demand and supply zones. I don't want you people to learn in that way. Always I want to raise some doubts in our mind. Basically, I want to shift your thinking level. That is what I'm trying to do. So that in future you will understand, in the future means in the upcoming lessons, you will understand the concepts in a much better practical way. Okay, this is about how we are moving from one time frame to another time frame, and then we are seeing how the risk and rewards will be changed. Hope you got better clarity. Okay, now I will also show you the settings for 75 minutes and 125, that is equivalent to 2 hours and 1 hour charts. Okay, assume this is 125 minutes zone, 125 or 75 minutes. That is equivalent to 1 hour and 2 hours. For 1 hour or 2 hours or 125 minutes and 75 minutes time frame, these are the color settings for background color. See below this thick dark color green, the row number 1, 2, 3, 4th. The fourth one I have selected, and the opacity value I have selected 40%. So please note down, and after that save as a template, and you can mark it as 75 minutes or 125 minutes. See the name I have given 125 or 75 minutes DZ I have given. And if your TradingView is a free version, you can give 1/2 hour. You can give HR, our demand zone. That way you can give the name. And similarly, let me show you the settings for 125 minutes supply zone or 75 minutes supply zone. For both the settings are same. In case if you are using a free version, it is 2 hour/1 hour supply zone. That kind of name you can give. Here below the thick dark red color, see the rows, first row, second row, third, fourth row I have selected, and the opacity value I have given 40%. Okay, and the last one is for remaining demand zone, lower time frames, demand zone and supply zones, like maybe 25 minutes or 15 minutes or 5 minutes. 25 minutes means half an hour, 30 minutes, equivalent to half an hour. If you are using a free version, you have to use 30 minutes. So for that, I have given names just DZ and SZ. That means demand zone and supply zone. This is for rest. So first let me show you the demand zone template. Here what I mean by demand zone is all lower time frames below the 75 or 125 minutes or 1 hour or 2 hours. The color settings I have given much dark color for the background color is the same fourth row below this dark green color, first row, second row, third row, fourth row, the fourth row. But here the opacity value I have increased it to 60%. After that, save as a template and you can give the name just DZ. DZ means for any time frame below your hourly or 2 hourly time frames or 75 or 125 minutes time frames. Similarly, for supply zone, I have given a name SZ for lower time frames. Look into the settings. The same, the fourth row below this dark red color, 1, 2, 3, the fourth row I have selected and the opacity value I have increased it to 60%. After that, I saved as a template and I have given a name SZ. So these are the different templates I have created. Maybe if you also create the same so that whenever I am explaining all the charts in the upcoming sessions or even the daily analysis reports, so that you can easily understand by looking into the color of the zones. There won't be any confusion between my explanation and your. But if you don't like these colors, you can change. You have that option. Okay, this is about the important points we learned about how to reduce the risk and reward. Now, let me show you the 125 minutes and 75 minutes zones. In case if you are using a free version, you may not be having options to select 125 minutes or 75 minutes. So you have only option to select 2 hours and 1 hour charts. But we have a disadvantage with that. Okay, let me select a chart, Reliance here. Let us assume you are using a free version. So you want to use 75 minute zone, but you don't have 75 minutes time frame. So you have to select the option 1 hour. So select the 1 hour chart. But 1 hour, what is the disadvantage? Every day at the end of the day, you have one short candle, that is a 15 minutes candle. When you get that candle, this is for Indian stock market. Mostly foreigners, if you are using, you are listening this session, mostly your stock exchange might be having 1 hour support and 2 hours. So there may not be any residual candles. But Indian stock market, we have 15 minutes extra time after completing 6 hours trading. That the extra 15 minutes is resulting as a short candle. See here, we have a 315 minutes candle. If you consider this entire thing is a ERC candle, and if you consider this is a base, and if you draw the template 1 hour, 75 minutes demand zone means 1 hour demand zone. And if you draw this demand zone, this is not a valid zone. Why it is not valid zone? Because this base candle is only for 15 minutes. What is the solution I suggested? Assume this base candle is also part of this previous candle. That way ignore this candle. If you ignore, what will happen? You have a ERC candle. Next one is also ERC candle. In between two ERC candles, there is no base candle. So you won't draw this base. That's why before you look into this candle, keep your mouse and check the time. Just below this, you are seeing Monday 20 November 23, 15:15. 15:15 candle, you have to ignore. 15:15 means afternoon 3 o'clock 15 minutes candle. So if that candle is there, only one candle is there, don't draw the zone. If two candles are there, no issues. Even if you ignore one candle, you have one more candle which is the actual base. Okay, can I draw? You may ask a question. Can I draw? This is a rally candle, and then we have a base, and then we have again a rally candle. Can we draw? Yes, you can draw. To reduce the risk, what you can do? Type two proximal line. See here how prices entered into this. And gave a good profit. Why gave a good profit? Here we have a supply zone. Somewhere here. That is 1 hour supply zone. That means 75 minutes. You have a drop candle and then, but you may see this. Okay, this could be a valid leg out, but compared to this leg in, it looks like a very small candle. The biggest problem is you have to zoom. The moment you zoom, you get clarity. You will see the actual length of the candle. Sometimes you may say maybe it is a little lesser. If it is a little lesser, don't draw. I will consider, okay, it's not a problem for me. Because this is a little bigger than the average candle. A little bigger. Because you are a beginner, you are yet to get some more experience. You have some confusion to consider this is a valid leg out or not. Then ignore it. Nothing wrong. But once your experience grows, small differences you will ignore and you will start drawing the zones. The biggest problem with the charts is the previous candle is a very big candle. After that, the rest of the candles looks like small candles. The visual representation is changing your view, and that changes your understanding. See, by comparing with this, all these are all looking small candles. This is one problem with the visual representation on the charts. This is what I observed. So that's why what I do generally, I zoom and then I will hide this bigger candle and then I will try to understand. See, compared to all these base candles, this is at least double the size of these base candles. That way I confirmed this is a valid leg out. That is what your experience, such kind of level, you're convincing, your experience means convincing yourself. Convincing yourself in a right way. If you are convincing yourself in a wrong way, that is again inexperience. So that could be the target. Now what happened here? We have drawn. Is it reached the target? Yes, it reached the target. Here it has given the entry. See, after that it reached the target. How much profit it has given? Simple, draw this info line, you will get clarity. From here to here, you draw a line. You might have taken your entry here. So how much? 19 rupee 45 paisa. Okay, you are getting negative because I drawn from top to down. Okay, to avoid because first time you are listening, from down to top I am drawing. Now you will get positive value. So around 19 rupees 60 paisa profit you got. But what is the actual risk? Let us draw. Around 3 rupees risk. Say around 3 rupees or 3 rupee 15 paisa risk. But this is 19.60. What is risk reward? So 19 divided by 3, approximately I'm calculating. So you got 1:6 RR for this particular stock. Excellent. It's a very good profit, a very good risk reward. See, again, it gave us another opportunity. See, again, it has given profit. Here you may ask a question because previously we learned if the zone is not fresh, we should not trade, we should not take second trade. That's true, most of the cases, but there are some special scenarios in the advanced concepts. The next, that is third phase of the training program, you will be learning a concept called high liquidity zones. The high liquidity zones will support multiple tests, even second time, third time, they are powerful zones. Even previously also I told you in the first phase of the training program, keep this point in your mind of the high liquidity zones. Because most of the people, what they do, they always fix this point in your mind. What is that point? If it is not a fresh zone, we should not take a trade. But I don't want you people should think like them. You should think if it is not a high liquidity zone, then only we take trade only once. If it is not a fresh zone, we don't take trade. If it is a high liquidity zone, we can take even second time or even third time. So that way you remember until you learn those topics. But time being, it has given a very good reward, 1:6. But how you have drawn this? By using 1 hour chart. Instead of 75 minutes, 1 hour chart you have drawn. Now you may ask a question. Suppose if it is 75 minutes, how the zone would have been? So now instead of 1 hour, the 75 minutes, let us see how the zone looks like. Is there any base candle? No. Now go to the 25 minutes. Now you can able to identify a zone here, but a little bigger. We have something like this. Now risk is a little higher now. We have a rally candle, base candle, again a rally candle, leg out. And got the first test here. Again second test. Again even third test. Again even fourth test. But 1 hour you missed all these things. See, look into the 1 hour. The 1 hour you got the first, you got the second, sorry, this is not the 1 hour is like this. The first one is a narrowly you missed, second one you got, third one narrowly you missed, fourth one you got. But when you go to 25 minutes, 25 minutes is the exact time frame. You got the first one, you got the second one, you got the. So now again we have to change it. This is the base candle. You got the first one, you got the second one, you got the third one, you got the fourth one, and you got the fifth one. So this is the way you see some differences when you are moving from one time frame to another time frame. So this is about how you can adjust the last 15 minutes candle when you are dealing with 1 hour charts. See, this is the 1 hour chart. This one you ignored. This is a 15-15 candle. But this is not 15-15, this is 10-15 candle. See how excellent this is. That's why 1 hour charts works. But you have to take care of this. But because some differences are there, sometimes because the 1 hour is a little less accurate compared to the 75 minutes or 25 minutes, sometimes you may miss some trades. See here. Why we are missing? Because of the candle adjustment of the time periods. But otherwise, this is one way you can start analyzing with 1 hour if you don't have a paid version of the TradingView. Always remember, those who cannot afford to go for paid version of the TradingView software, you need not worry. This is the best alternative solution. The only thing you have to do, you should ignore the 15 minutes candle. You can assume that candle is part of the previous candle. That is the only one extra check you have to do. See, but otherwise you got a good trades here. You got a first trade, you got a second successful trade. But also should remember sometimes a little inaccuracies you may get. That possibility is there with respect to the targets or with respect to the stop losses. But we have to limit yourself with that limitation. But those who can afford, I always recommend you go for the paid version. Why should unnecessarily bring a little disadvantage into your analysis? Maybe this is not the right time to go for paid versions. It's too early for you. Once after learning, once if you are learning the concepts, so once you are getting into the actual trading, at the time you prepare to go for paid version. Because always remember our tools, we should have a strong tools. Because all these tools are our weapons. So always you have to keep strong tools. You should not keep anything that gives you even a slight disadvantage. Because we are going to make money by using these tools. So that's why accuracy should be there. I'm talking about those who can afford. But those who cannot afford, this is a workaround solution, but any little disadvantages are there, you have to live with them. All these problems we are getting because our Indian stock market is having a 15 minutes extra trading hours after 3:15. Because the Indian stock market is starting at 9:15. 9:15 to 10:15, 1 hour. 10:15 to 11:15, another hour. Like that we are getting 6 hours. After 6 hours, that is after 3:15 to 3:30, we have only 15 minutes time frame. Because of that, we are getting a very small candle. And we have to ignore that. But we are ignoring that candle, but the overall time, overall candles adjustment time period, definitely that gives you a minor disadvantage, a minor. In terms of calculating the stop losses or in terms of calculating the targets. But at this point of time, it's not at all a problem because you are learning. When you are in the learning phase, only you will be observing. There won't be nothing harm to practice our concepts. But once you go to the live market, accuracy is more important. That is what I am trying to say. So we have discussed about different scenarios. So we have seen how to draw demand and supply zones at different time frames. We have also seen how the risk is changing when you are moving from lower time frame to higher time frame or higher time frame to lower time frame. Similarly, we have also seen how the rewards are also changing when you are moving from one time frame to another time frame. And we have also observed the most important point. The best way to reduce the best way to reduce the risk is by moving to the lower time frames. And the best way to increase the reward is by moving to the higher time frames. And if you understand this concept, if you understand these 2 points, the upcoming lessons, whatever I am going to teach you, you will understand in a much better way. So that's why I already put some questions in your mind. You should not forget them. And apart from that, I also explained how to give different color settings in the trading view for different supply demand zones belongs to different time frames. I have shown you all my settings. So if possible, you also try to create your zones and save them as templates with the same setting values, so that always we will be in sync. So when I'm explaining all the future related lessons or charts, you will be able to understand because my settings and your settings are similar. So this is about the practical session of our lesson 11. And if you are having any questions, please do not hesitate to ask in the comment section. I am ready to provide answers to all the questions. But always remember, always focus your discussion limit to that particular topic. Sometimes I'll be teaching some of the future related concepts and the further topics. If you are asking the questions unnecessarily, that will lead to some confusion. Actually, these questions will be raised by some of you already learned some demand and supply zone concepts earlier. So that's why just wait for some time, and once we get into that topic, you ask the question so that there won't be any confusion will be there. So this is about our lesson 11 practical session. The next lesson we will understand the purpose of defining the time frames. Okay, I have explained time frames. Okay, you practiced, but you should get a doubt. What is the use of defining all these time frames? What is its purpose? Why so many time frames? Okay, maybe one purpose you might have understood, that is risk and rewards are changing. But even then, what is the real purpose of learning all these time frames? So in the next lesson, you will be learning some important topics related to the different income trades. Then you will understand the real purpose of why we are focusing on all these time frames. So let us all look into the lesson 12. And again, let us meet in lesson 12. Thank you.